Hey guys, in today's video, I'm going to teach you the difference between options and futures trading. After today's video, you will understand the differences, the pros and cons of each, and which one is going to be a little bit more applicable to your trading style. So without any further ado, let's dive in. So if you've ever watched any of my other videos, I am just a huge proponent of giving you practical examples. I think that that's the best way to learn, bar none. So I'm going to talk about three things today, and I don't want you to confuse them. And the reason why I'm going to focus on the three things that if you understand them, then, differentiating between options and futures is going to be very easy, right? It's like the difference between green and red. So we're going to focus on stocks. We're going to focus on futures contracts, and we're going to focus on options. Now, options and futures are the biggest difference between the three. Stocks and futures function, right? Conceptually function identically. The only difference is that with futures, the margin requirement is the difference. So before you put me in 2x speed, right? This video is not going to be that long. I would prefer that you listen to me in regular speed. The reason why is because I want you to understand the finite details here. If you understand the details, 15 minutes of your time is going to set you up for your trading career. Literally, that's literally what we're going to be doing here with understanding the differences. All right. So when we're taking, let's just start off with shares, right? I don't want to insult anyone's intelligence. That's not what I'm here to do, but let's look here at the bottom of the panel. If I'm going into SPY and I want to buy a stock, right? Just regular stock. I want to go long or short. It's quite simple, right? You can teach this to mom, to dad, to grandpa, grandma. It's simple. You want to buy 5 shares, 100 shares of SPY. You need a little bit of money, set that aside. Bada bing, bada boom, right? It's a very binary transaction. With futures, it's the same thing. The only difference is the buying power requirement. With futures contracts, you do not want to be trading overnight because the overnight requirement is significantly more than it is for intraday futures. So this is with most prop firms. I believe it's with all of them. They don't want you to hold the positions overnight. And the same thing with even if you're trading a live account like I am here. So if you are going to do the futures route, it's perfectly fine to do that. But understand, it's really, conceptually speaking, it's no different than buying shares. It really is not. It's just a little bit of a different vehicle. So the buying power requirement here is not that bad, right? Traditionally speaking, you needed to buy 100 lot of something in order for you to get into position. You make the call to your broker, you pay the 65 or whatever it is, $100 for you to get into the position, and then you go from there, right? Now you can trade one share or you can do fractal shares. So you don't need to be putting up $30,000 to get into SPY. So let me show you how that is identical, literally identical to you trading ES. So /ES is going to be the equivalent of SPY for futures. Now, I don't want to scare you with the number that you're going to see there on the bottom. I believe to get into this position, it's like $26,000. We're going to get over this here in just a second. Most of you are already aware that we have regular futures, which are going to be called the minis, and then you have the micros, which are going to be 1/10 of the buying requirement that you need to get into the position. If you're doing intraday trading or just basically day trading, then that margin is significantly less, okay? So we're going to get into those details as soon as I show you the difference between options and futures. So let's go long on ES. Right? What is it? It's $24,000 basically. So $24,000 in order for you to get into one contract. Now, I'm going to heavily infer this. With contracts, they have expiration, but you don't need to worry about the expiration at all. Why? Because you're not going to be holding on to these positions overnight. At least for 99.999% of you, that's not where you're going to do. I don't do that either. So when I do take a position, sometimes I do take ES, sometimes I do take NQ, same thing, right? Sometimes I go into here and I take a long or short, depending on what my bias is for that particular time period. And that's my buying power requirement, right? So exactly identical to how shares work. No difference whatsoever. The only difference is you're not going to be doing 5 quantities of /NQ, right? You're going to need $170,000 in order to get into that. I mean, some of you might be there, but I'm just saying you generally want to stick to a very low quantity. Now, how do you get around this, right? How do you get around the buying power requirement, so to speak? I'm just going to throw this in here, but there is something called the micros. The micros are just going to be more retail and more small trade friendly, right? This is what people trade. This is what retail traders do. So Instead of going into the option chain, I'm going to tell you the difference. I'm going to point it out here in just a second, but you're going to go into right here, just like you would with any shares position, and it's either long or short. That's it. That's it. There's only two options. There's no iron condors. There's no selling. There's no, well, there is selling, but there's no option selling here. I mean, it's going to be really hard to mess this up if you understand the difference between the options and the futures. So long or short, right? So what is the buying power requirement now? Instead of it being 32, 36, $40,000, it is a tenth of that, okay? So with micros, now you can do a couple more contracts, right? It's possible to do that. You can do 3 contracts, you could do 5. A lot of you are already doing this, and then you trim out your position. But ultimately, I want you to notice, right? With shares, it's either a long or a short. It's either a buy or sell. That's it. And then you select the quantity. Most of you are going to be doing one quantity at a time, whether it's MNQ or MES, same thing. So let's go to /MES. This is going to be the equivalent of trading futures, right, on SPY, just not using the same buying power requirement that we just saw before. So there it is. The buying power now is 2,200. This is a little bit more feasible. Now you can do more contracts than this, no problem. Cool. Now, you don't have to worry about theta decay. You don't need to worry about, well, I mean, delta you have to worry about, but not at the capacity that you would as an option buyer. Now, how do you understand the difference? This is just a very, very quick, practical way for you to understand the difference between if you are in a futures contracts position or a futures options position. There is such a thing, right? Options is not just on stock. I want to be very, very clear here. You're not just going to go on SPY and then go to 27 DTE, buy a 590 put, pay your $850 or whatever the price is. It doesn't just work on stocks. It also works on futures. So remember what I said in the beginning part of the video just a couple minutes ago. Understand the concepts. Don't focus so much on the terminology. Options are going to work for any underlying, right? Or any asset class. You can have options on certain currency pairs. Now you have options in crypto. So the options, for you to understand the difference, all you got to do is just look down here. So I have shares on this, so let's clear the order. And let's just say I want to get into a 590 put. The huge difference here is that little P or that little C, right? Call or put. If you see that on your order, then you know that you're either buying or selling options. So let's do a selling option position. Then you need even more buying power, right? So you need an exorbitant amount of buying power here to get into this position. But ultimately, the difference is here, now you have an expiration and you have a call or put. If you see that on your order, you already know, okay, hold on here. I'm looking to get into an options position as opposed to, doing what Sage is telling me here to do, which if I want to get into a futures contract position, then it's going to be binary. It's either buy or sell. Cool. So I'm going to just point that out one more time because I want you to see it. Pay attention here to the order, right? Let's just do a 590 put. So this 590 put is going to run me $850, right? And this is a futures, this is just an options contract. Let's do this on ES. It's going to be the same thing. It's just the same exact thing. No difference whatsoever. We don't got to complicate this. Let's go to 27 DTE and let's see how much that's going to roll us. So let's do a 500 and let's do a 5,900 put. So that 5,900 put is going to cost me $6,100. Okay. Same thing. It's the same thing. It's just going to be on a futures. Now, how do I know? Let's clear the order here. How do I know that it is a futures options position or just a futures contract? It's very easy. I just pointed that out. You have an expiration, and then you have the buy to open, which is either a call or put. Now, if I want to do the futures contract position, which is what most of you guys are going to be interested in, is you're going to go up here, wherever it is on your broker, and then you're going to select a long or short. So we're going to do a long here, and you see the difference, right? Instead of it being, right, no extrinsic, intrinsic value, you don't got to worry about that stuff, right? You don't got to worry about it. All you got to worry about is if you're either going long or short. Now, to add to this example, really, really practical example, it's extremely practical. If you want to do the minis, you're just going to go /MES, right? These I have memorized, and it's also here on my watch list. And now, right, if I want to go more than one contract, 2, 3, 5 contracts, I can do that, right? Just be aware of how much buying power you're using, how big your position is. That's for a different video. We're not really talking about that here in this video, but it's quite simple. It really, really is quite simple. So what are some of the pros and cons here? It really comes down to what What is it that you're trying to do, and what is your technical analysis telling you, right? So I'm going to get into that here right now. All right, so here I am on the chart for ES, right? It's using technical analysis. Now, the application and the technical analysis will not change. It's going to be completely identical. So your day trading futures or your day trading options, perfectly fine. With options, you have more things that you need to consider. What is the dates to expiration that you're going to choose? What is the contract that you're going to choose? With futures, you don't got to think about that at all. You just have to think, if I'm going to take my entry is going to be, let's just say 60-60 right here. Let's just hypothetically say that. So 60-60. If I'm going back into my broker, right, and I want to set that order, if I'm going to set that order, I'm going to come into here. I'm going to go to /MES. And remember, right, what we just talked about for a couple minutes is I'm going to go short, and I'm going to, let's just say I want to put in a bracket order. I know how much I'm standing to lose, and I know how much I'm standing to make, and then that will populate here on the chart. So I have my entry. I'm just going to hypothetically do this. I'm going to set my stop loss, and then my TP, my take profit, is going to be down here. So this is identical. This is literally identical to what you would do with an options contract. The difference is the vehicle that you're choosing, or your weapon of choice, so to speak. So on a futures contract, if I am going to take this position, right, I'm going to, let's say, look for 25 points on this. So 25 points, each point on /MES is going to be $5. So 5 times 25 here, looking at $125 if you just take one contract. That's what it's going to be like. If you do an options position, you can make substantially more, right? So with options, there's no limit to what the upside is. Theoretically, there's no limit to what your futures can go to as well. You can take a futures contract, and if something were to happen in the market, and then now you're down by, let's just hypothetical, I'm just using hypotheticals here, but let's just say now you move 2%, right, off to the bottom. You can make a lot of money. You can make quite a bit of money. But the explosiveness and the amount that you can make via options is astronomically higher. It's just astronomically higher. However, with a futures contract, which most of you are very well aware if you have any practice or any experience with trading, I mean, it's not really feasible to think that you're going to be selling off 2.5% intraday. I mean, it happens, but it's not realistic. It really is not realistic. So how would I think about this on choosing one or the other? What are the pros and cons? The pros for you to trade futures is that you are not susceptible to something called theta decay. Theta decay is the number one cause for option buyers to just lose their minds. Okay, this is basically what it is. Not really a formal way to describe it, but it is, right? So the number one susceptibility for traders to blow up their accounts is going to be trading in choppy markets, right? How do you know if you're in a choppy market or not? This isn't the video for that. All in all, if you trade, you understand that sometimes things just don't happen. They just don't happen. So as time goes by with the options contract, you are susceptible to theta decay. Can you sometimes pay $20 for an options intraday on ES or MES, and then you can have that thing, go 800%? Of course. But it doesn't happen that often. Cool. Now with futures, if you have that position on, independent on if you're sitting in the position for 20 seconds or for 3 hours, so long as you do not penetrate above your stop loss, right? You do not have to worry about theta decay, or you have to worry about delta, but you don't really have to worry about any of the Greeks. You really don't. It's just a matter of directionality. So when I said weapon of choice, it really depends on what your trading style is and what ultimately are your goals. In my opinion, if I can just be very clear about this, is I think that there's a place for options, and I think that there's a place for futures for the majority of situations without me imposing my own bias onto you. I think for myself, I like trading futures a little bit more. Futures are going to be more expensive on a commission base than it is for options. However, I think that you can control a lot more of the risk appetite and a lot more of the psychological acumen that you need in order for you to trade daily or day trade in the stock market. So why am I saying that? If you are holding on to an options contract, or if you've ever done that intraday, you understand that they will decay. And they also are very susceptible to just explosive moves in either direction. So sometimes what happens is, even though something might not be happening in the market, you still might be losing money on buying a call or a put. Now, is that always going to be the case? Of course not. People are going to be trading 0DT options or just options in general all day long, right? Millions of people do it. You just have to weigh your pros and cons. So I'm telling you what they are for me, and then you can decide for yourself what you want to choose in order for you to day trade. So on the ES situation, had I taken a short, I actually didn't take a short on this day. I made some money on this day, but I didn't take this one particular short. So had I taken an option contract and this moved deliberately into my TP as quickly as it did, theoretically, this could have been 500% gainer. So if I put $100 down, I could have 5x my money. With futures, I would have not been able to do that, right? So a 500% return or more is substantial, is absolutely substantial. I'm just making up these numbers. These numbers are not true. But the possibility is there, especially if you're good at risk managing. I mean, it's pretty good. The one drawdown, just the one drawdown that I'm not too crazy about when it comes to shorter dated options, me in particular, is that if you do start moving in your direction, but you don't do so with velocity, even though you might be winning on the position, that position might start losing theta decay, or just regular theta. I should just use the word theta. It might be losing its extrinsic value because it hasn't moved in that direction quickly enough. So whenever you're in a sideways market, even though your direction is correct, this is the one positive about futures. Even though your direction is correct, if you don't move in that direction quickly enough, then that option contract might still even lose money. Okay, so those are going to be the pros and cons that I wanted to outline for you guys. And this is just one very, very quick example. I'm going to jump back into the broker here in just 1 second so I can outline one more thing, and then we'll call it a day. Okay, guys? We're here back in the broker. Now, I just gave you that practical example, right, on ES, just talking about futures or options. Let's do a little bit of a recap here before I continue, and then we'll conclude the video. So you already know if I'm in an options chain, if I'm going 27 DT, whatever, but I mean, fill in the blank here. If I'm going to do a put, I know the order is going to be an options position because the order tells me there is an expiration and there's also a put or call that I'm either buying to open or selling to open. That's simple. Don't conflate the fact, or I mean, don't mix this up, right? Options can be traded on pretty much any asset class out there, on crypto, certain currency pairs, not on everything, right? Not everything has options, but 80-90% of the stuff do. So just because it says futures options, it's not anything confusing. It's just options on futures. It really is that simple. So coming in here on ES, on SPY, whatever the case is, man, you already know the order here gives you the expiration, call or put. You're in an options position. If you do an OCO order here, which I'll show you here in just a second on what it looks like on futures, you go back into your chart. The only difference, man, is that if you're going to play this game, if you're going to play the options game, if you are sideways or if you stay within a channel, there is a chance, if you're doing extremely short dated options, there is a chance that you will lose some of that theta, right? So let me show you what theta looks like. Theta is going to be right here. So as time goes by, if you do the 0DT, 1DT options, there is a likelihood that you lose 10, 20, 30, 40, 50, 60% of the extrinsic value of that options contract. This is where futures comes in, right? So depending on what your trading style is and what your goals are and how you trade your risk reward, one is going to be better than the other. Sometimes with options, you can put on 20 positions on options. You can lose 19 trades, and all it takes is that one trade in order for you to hit a home run. That is a perfectly legitimate trading style, perfectly legitimate. I prefer, and I'm not trying to impose my bias onto anyone. I never do that ever, but I prefer a little bit more of the consistency curve. What do I mean by that? So if I'm in a sideways channel and ultimately the trade doesn't go in my way, I have a finite amount of money that I'm looking to lose. Usually it's fairly low. I don't have a very high risk appetite. So if I'm going to my futures positions, right, I'm going to go /MES, I'm going to short it. If I'm going to put on a bracket order, or some of you might know this just as an OCO order, this is literally it. This is my risk appetite and my profile here. I'm looking to risk maybe $40. We'll round that out at 40, and I'm looking to make $200. We'll round that out as well. So that's more than 4-to-1 risk reward. With options, you can make so much more money than this. So much more. But you have to be more aware of the theta decay, and you have to be more aware of the susceptibility of you being in a choppy market and sometimes things not happening. Okay? Sometimes, this is the advantage of futures that they have over options. Sometimes you're in a sideways channel, and so long as you do not break to the upside, in this situation I'm in a short, if you do not break to an upside, how much money am I willing to risk if I got into here and then I broke to the upside? I'm willing to risk the $40. That is it. There's no if and or buts. Now, if it goes in my direction, all I have to do is manage the stop loss and I can make my gain. With options, this is a little bit of the Achilles heel with options, right? There's the Achilles heel, but there's also, you can have triumphant returns. If I am in the sideways channel, I get in here and then I just trade sideways for about 2 to 3 hours. Even though you haven't really moved in the market, you're still susceptible to losing the value that you paid for your contract. Do you understand what I'm trying to tell you? So you can lose a lot more than $40. With the options contract, if you are sideways and you set your stop loss at $40, you might get a gigantic move to the downside. But as soon as it triggers the $40 loss, then you're out of the position. With futures, you do not have that problem. So you have to weigh your pros and cons here. You have to say to yourself, well, if I'm going to be taking a position, what kind of risk do I want to incur? And can I sit in a position for long periods of time? Or am I very good at timing the market and I can see order flow or I can see things in the market and I can get into positions fairly quickly? I mean, there's no problem with you coming into the 2-minute or 3-minute time frame and then look to trade options if your technical analysis is telling you, hey, I can very clearly see a short or a long here, and then you get into an options contract and make a lot of money that way. There's no problem with that. There's no problem with that. Just understand the pros and cons, okay? So to recap, I'm just going to share with you one more time. So to recap, if you do see long or short and you see quantity, independent of what broker you're on, if you see quantity, you know that you're trading futures so long as you have the ticker correctly. If you see expiration and you see call or put, then you know that you are trading options, okay? If you understand that, then you're setting yourself up for success, especially if you're looking to day trade, just like we do here. I'm very curious to know how you guys are trading, if you rather trade futures or if you rather trade options, and how it has been working out for you. So if you can, just 5 seconds of your time, leave us a comment down below. Tell us what vehicle or tell us what trading strategy that you guys are using so we can also detail videos and content that are tailored to your trading style. And if there was something that was unclear during the video, please let us know. Like, comment, subscribe so you guys can have actionable trading decisions and plans that you can use in order to prosper in the market. Thank you for watching this video, and we'll see you guys in the next one.